You have several things that you possess that will make you a good investor. They're inherent to your life. It's the field you work in. It's the area where you live. There may be some local company that's terrific. You're a consumer. You see some products. You see some services that are terrific.
In the summer of 2025, I graduated from university getting my master's degree in political science. Now, as soon as I graduated, I started applying and looking for jobs, and I found an interesting recurring pattern from almost all these job descriptions. Now, it's said that candidates should be well versed in using the Microsoft Office package, and I had used this in every institution I'd been through, from school to university to internships to jobs. And the reason I started playing this clip by Peter Lynch is that by purchasing shares of Microsoft, I purchased into something that I knew. I have used my experience from school, internships, and jobs in order to get some insights that allow me to understand a company's value creation in a better way. Peter Lynch is very famous for broadening this whole phenomenon of being able to make a lot of money by buying what you know. And by buying Microsoft, I've done exactly this. And in this video, I'm going to explain my core thesis for Microsoft. Now, before we get into it, I initiated a small position, and I don't think the price I paid was a steal. I paid $454 for my shares of Microsoft. But I did buy into a long-term growth machine, an industry standard in enterprise and institutional communication and organization, and a machine for vertical bundling. I bought the operating system for enterprises that is going to be accelerated by Azure, by the cloud, by AI. This company has a unique ability to increase the offerings, onboarding new methods of communications, such as Teams, right? With a strong position in AI cloud with Azure. The overall and main reason why I purchased Microsoft was that this company is one of these very unique companies that has the ability to grow volume and grow prices with deeply ingrained products such as the Office package, such as Microsoft 365, and Azure being one of these new central key elements for the enterprise. Now, Azure is onboarding and becoming more intelligent, becoming and striving to become the operating system and the platform for developers to develop artificial intelligence.
Developers. Yes!
Now, basically, my thesis can be summarized by Microsoft having a unique ability to increase prices and volume. Let's hear what famous investor Chris Hohn has to say about this.
The point about growth can come from two forms, price and volume.
Yeah.
Okay? And most companies don't have pricing power. They can only price, if they're lucky, at inflation. And that's why people don't focus on it. They don't even look at where growth comes from. They just assume it's volume plus inflation. But there is a special group of super companies that can price above inflation. And that's, as Buffett taught, the test of it, whether you have the moat. Okay? And this real pricing power above inflation can be very valuable. Because if you can price 1% above inflation and you have a 20% profit margin, your profits will grow 5% faster than revenue. And people don't go into it or analyze it because there's so few companies that...
I think Microsoft is uniquely positioned to be able to increase prices in the future and to increase volume as well. And that is the main reason why I purchased shares of Microsoft, making it a 2.9% position. I will be adding to this position with time because I believe Microsoft is uniquely positioned and has a great place in the future, right? So it's a long-term bet on this Microsoft stronghold on the enterprise with the Office package, with the cloud, with Azure, with Microsoft migrating towards AI becoming the toolbox for AI developments. So the small position size does not reflect my bullishness on Microsoft. I am very, very bullish on this company. Now, as I said, I don't believe the price I paid was a cheap price. I don't believe I got a steal, but I do believe that Microsoft has a very long runway in terms of growth. And the terminal value for Microsoft, I did not use terminal values in terms of justifying my entry price, right? But I do believe that the terminal value for Microsoft could be said to be relatively high because they have such strong pricing power. They have this unique ability to bundle products and increase the offering, increase the value proposition for their customers, increasing the total joy customers and enterprises get out of the product, increasing total productivity that enterprises can create rate from Microsoft. Honestly speaking, I don't really think that I need to show you any charts to prove that Microsoft with their Office package is a deeply ingrained system. It is a deeply ingrained operating system for the enterprise. I do not need to prove you this. You can go look for yourself for job applications. You can go look for yourself at the school you go to. I assure you that they have the Office package. At the workplace that you work, I can assure you that they have the Office package. And most likely, the companies that you work for and the schools you work for would probably be more likely to fire employees than quitting the Office package. It is a core element and a core cornerstone in terms of enterprise internal communication, external communication, structures of enterprises, right? So Microsoft has deeply ingrained products. I do not need to show you this. So going into their revenue by segments, we can see Microsoft is a great example of a company being able to increase prices and volumes, and their revenues really do reflect this. This is a beautiful symphony of price increases and volume increases. So what I want to show you guys is the productivity and business processes segment, slowly but steadily growing, right? So having a great growth rate, combining both volume growth and price increases. This is the central key cornerstone for business communication and business processes. This is the Office package. This is how business communicate internally and externally. Where I do see the outperformance happening over time is the intelligent cloud section. This is especially with Azure. It is becoming the platform and the artificial intelligence toolbox for developers, for enterprises, right? And we're going to see this increasing by a lot, maybe even accelerating in growth. They are capacity constrained. As soon as they add new capacity, they sell it out. It's a very similar position to Amazon. Heading back into fiscal AI right here, we can see their productivity and business processes revenue really increasing steadily with time. So these are the licenses that they get for per employer in terms of getting money and monetizing this Office package, right? So what we see here is this growth slowly but steadily growing over time. I really think that looking at Microsoft's cloud revenues is a beautiful sight for the eye. So this grows with a compound annual growth rate of 37%, raking in revenues of almost $140 billion in 2024. So this is a compound annual growth rate of 30% plus on this amount of money, on this much money. It's above $100 billion yearly revenues. Growing this much from this basis is incredible, and it really does show that Microsoft is uniquely positioned to take a lot of this intelligent cloud market through Azure, right? Especially since they're so deeply ingrained into enterprise processes before, right? With the Office package there, and are an essential and central element in enterprise. Everything runs on Office, and everything for the enterprise is running on Azure, leading to this incredible growth. So as I just mentioned, Microsoft, by using this clip of Hohn, I just illustrated that this company is uniquely positioned because they can increase volume and prices. Another thing that this company does, and which adds great value to the Office customers and to the Azure customers, is this idea of bundling. Now, once again, I'm going to play you a clip of Hohn, and this really does explain why Microsoft is so hard to outcompete. They don't have to be the best, they just have to be good enough.
So there's a lot of power of incumbency. This is another important point. So let's take a company, Microsoft, okay, which we've invested in, and one of their barriers to entry is bundling, okay, or maybe because it creates a customer switching cost. What do I mean by this? So the Office franchise, which we're all familiar with, has many products in it. You know, your applications, word processing, Excel, your email, security, different things, and they sell it as a bundle. Yep, they don't disaggregate it. And when a new product or a potential competitor enters, they can add it to the bundle. So Zoom came out with video conferencing, and they could have potentially, added all the things Microsoft does to that. So Microsoft had to respond, and they launched Teams, and they were able to distribute it through the bundle. Yep, free to everybody. And even though Zoom, some people believe was a better product, or is a better product, Microsoft won that battle because they had the installed base, the incumbency, which we talked about, and high switching costs for because once people are using their Office software, they don't want to switch. And so people started using Teams. Okay. Something given to you free. Why? Because it was good enough. Yeah. It didn't have to be the best if it's free. Yeah.
What about the other tech companies?
So what this clip is meant to show you guys is the fact that Microsoft can just add new verticals. Microsoft can just add to this suite of products they offer the enterprises, and they don't have to be the best. They are so deeply ingrained, and the switching costs for leaving office are just so high. Now, I did mention that your workplace would most likely fire and lay off people rather than quitting the Microsoft Office package subscription, leaving Azure, right? Going and finding another platform, because it's just such a great way for the enterprise to build. They have such great offerings for the enterprise. Being able to bundle solutions does really increase their comparative positioning. They have everything. They have Word, they have Excel, they have Teams, they have all these things. And whenever something new and interesting comes for the enterprise, Microsoft can just copy it, and they don't have to be the best because you're already paying for their prices. The switching costs are so high. Microsoft isn't just a play on Azure and the Office package. It is a play on a lot of different things, such as Minecraft, LinkedIn. LinkedIn has over 1 trillion users, right? It has so many users. Once again, the professional segment, so the enterprise people are on LinkedIn. Microsoft is really good at consolidating this enterprise market around itself, right? With Office, with Azure, with LinkedIn. They also have GitHub, which is a very popular platform for developers with extremely high market shares. Microsoft is also one of the biggest players, just one of the biggest revenue players in terms of cybersecurity. Cybersecurity is a massive secular growth trend, and Microsoft is a key component and key player in this segment, right? They make a lot of money on cybersecurity just because it is integrated in their offerings. You have Office as it is, and you can get cybersecurity through Microsoft. So it's just such an overpowered enterprise player. It just consolidates every enterprise need into itself. My long-term thesis for Microsoft isn't that anything major is going to change. It's just that people are going to keep doing what they're doing. It's one of those places where things don't necessarily have to change in order for you to be right. Things just have to keep being the way that they are. Being so central and integral for enterprises and being so central and integral for professional workflows, Microsoft needs to fumble very, very hard, and doing so over a long period of time in order for them to lose value, in order for them to lose their comparative positioning. They have to fail and do so consistently over such a long time because things just take so long for enterprises, right? So it's not just a play on Office and Azure, as I said. It's a play on multiple things. It's a play on Minecraft, gaming, LinkedIn, GitHub, development. It's a play on cybersecurity. It's just such a broad, well-diversified company, and they have so many levers to pull. In this video, I'm not going to go into depth with all these different elements of Microsoft, with Office, with Azure, with GitHub, with LinkedIn, all these elements of the Microsoft suite. I'm not doing this. This video is just for me to show you guys and present my Microsoft thesis, being that things are not necessarily going to change. They are a key player for the enterprise, and they're consolidating the enterprise needs around themselves, increasing their offerings, offering bundling, increasing their amount of verticals and horizontals, right? Microsoft is just such a deeply ingrained company, and one of these unique companies that can grow volume and prices simultaneously, doing so at a very long time, which leads me to the next point of the video. Now, I started this video by saying that I don't think that I paid a steal for Microsoft. I don't think that I got this company at a screaming steal. What I did pay was, in my opinion, a fair price for a company that can keep growing by double digits for a very, 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 very long time. In my reverse discounted cash flow model, I haven't used the free cash flow that Microsoft did present for 2024, which was $71.6 million. The reason why I didn't do this is that this free cash flow doesn't gauge the full value creation for Microsoft. Microsoft has a lot of capex, not necessarily as much as Amazon and Google and all these other hyperscalers, but they have high capex. They invest heavily into cloud and into their AI infrastructure, right? So what I did was that I took their operating cash cash flows and I subtracted stock-based compensation, and then I subtracted depreciation and amortization. Now, the reason I subtracted depreciation and amortization was to sort of get a good proxy of their operating costs, so what it costs for them to operate their cloud, right? So doing this, I landed at a free cash flow of $85 billion for 2024. Now, with a discount rate of 10%, they have to compound their growth for the next 10 years by 20%. Their free cash flows are not going to grow by 20% for the next 10 years. This is a lot to ask for. This is a steep ask in my opinion. But what it does not gauge, I had this terminal growth at 0%. Microsoft is going to grow their free cash flows at a double-digit rate for a very long time because they are in this sweet spot of volume growth and price increases. They are so deeply ingrained into the enterprise processes that they can just increase prices over time and they will add in terms of volume. I also didn't reduce their shares outstanding. We all know that Microsoft is a great company in terms of returning cash flows and returning money back to investors through share buybacks and through dividends. Heading back into Qualtrim, we can see that their shares outstanding for this year are much lower than they were for just 10 years ago, right? They are lower by about 500 million shares. So they are slowly but surely decreasing their total amount of shares outstanding, which makes doing these discounted free cash flow models very tough. In terms of this terminal growth rate, I have a final clip of Chris Hohn that I would like to show you. This clip is meant to illustrate that Microsoft is one of these companies that can just keep growing for a very long time. So the shorter the time period it is, companies have to grow by a lot, but the more you stretch this time frame out, they have to grow less and they can grow into this valuation with time. Let's hear what he has to say.
The longer you can look out, if you've got a great company, the more value there is. Take a company we own, Moody's. Moody's,
a rating
agency. So it's been around 100 years. What do you think the average, I can ask you a question, make it fun. What do you think the average revenue growth over that 100 years has been?
I'm going to look like a total fool, but
100 is a long time.
7%.
10.
Wow.
So after it's a very unusual number over a very long time period. And so investors have always underestimated its value, including myself. Yeah. And I bought the stock during the financial crisis at 10 times earnings and I even bought shares Warren Buffett was selling and he reduced his stake from 25% to, I think he's got 15% and Berkshire. And
Are you kind of secretly pleased having bought something cheap from Warren Buffett?
Yeah. But then I sold it. I doubled my money. I went from 10 times earnings to 20, and I sold it at $100, bought it at 50, sold it at 100. I thought I was clever. And then, but the earnings kept compounding.
So did you buy back?
I bought it back at $150, so now it's recently $500, now $400. So it's because actually the intrinsic value compounding matters more than the stock price. If you have a great company, it will grow intrinsic value.
Absolutely.
And the multiple. Here's the thing about the multiples: they matter less than the growth when you look at it over a longer period. But most investors are unwilling or unable to invest on a long-term time horizon because either they don't know what they're doing.
So really good nugget here is that if you buy something which is really good, it doesn't quite matter what you pay for it because it will grow.
Secondary over a long, let's just say it like this, the multiple to a point, whether you buy it at, if it's growing, it's all maths, you've got to look at the growth rate, the terminal multiple, all the multiple things. But if it's increasing intrinsic value at a good rate, you will undervalue it if you look at it over a short horizon. Yep, I can be saying it like that. And if you're willing to hold it for a long term and extract that intrinsic value growth, it'll be worth more to you than other people.
I do not think that it's delusional to put Microsoft into the category of companies that are able to do this. As I've said throughout this whole video, Microsoft is so deeply ingrained and entrenched into enterprise processes, and even into not even enterprises, but states, parliaments, municipalities, right? All these enterprises and professional settings, organizations of people. Microsoft is just such a central element in this. They're essential for developers. They have Azure, they have the Azure cloud, they have LinkedIn, they have so many different levers to pull. The switching costs are incredibly high in terms of switching from Microsoft going to another thing, right? And doing the bundling really does allow for them to keep their customers over a long time. Customers don't need to have Microsoft Office and then Zoom and then all these other things for all these different processes. They can just run it all via Microsoft. Microsoft doesn't have to be the best, but they just have to be good enough. And they are good enough. They are more than good enough. So with a high terminal growth rate, with an ability to keep customers, with a unique position to grow volume and prices, with a unique position in artificial intelligence right now. I haven't even mentioned OpenAI. Do you see this? I completely forgot that Microsoft owns % of OpenAI. That slipped my mind. This is not a part of my thesis. These are not parts of my thesis. Microsoft can grow. Microsoft is gonna grow with Azure, with the cloud. Microsoft is gonna grow with OpenAI. Microsoft is gonna grow with the Office package. Microsoft just have so many different levers to pull. I completely forgot to mention OpenAI in this video. Do you see what Microsoft is? It's just such a broad company with so many levers to pull, with such long runway for growth, which is why I can justify paying this price of $454 per share, which is why I can justify holding this company over a long period of time, because I think Microsoft is one of these companies that can just grow for such a long time. In this video, I've explained why, and I've explained my core Microsoft thesis. But my Microsoft thesis consists of so many different things. It consists of Azure being the platform in order for enterprises to build artificial intelligence and for their cloud, right? It builds on the Office package being such a deeply ingrained element in enterprise processes. It builds on LinkedIn being the place for professionals to connect. It builds on cybersecurity as a secular growth trend for this company as well. It just has so many different things to it. Now, as Warren Buffett says, it's better to buy a great company at a fair price than it is to buy a fair company at a great price. With Microsoft, I do honestly believe that I'm buying one of the 10 best companies in the world at a fair price. I have to say none of this is investment advice. I work for NewDeal Invest. NewDeal Invest hasn't reviewed or approved of this content. This is just my opinion. Everything that I say is just my opinion on Microsoft. So I appreciate your time, and I'll see you in the next one.